What is going on with the Moca network token? We have been pumping, then dumping, now we are pumping yet one more time. How much higher can the price go? What's behind this price rally? We're going to look at the on-chain metrics most people are not considering. So we're currently at 29 cents. Since listing on CoinMarketCap in July of this year, the price has more than tripled. Moca is a metaverse play and the website does look quite impressive, but it doesn't really contain any information that gives us a market edge, right? We want to look at the information most people aren't looking at. We want to figure out how to time the bottoms and the tops better. And so here's the first interesting data point. On Twitter, or now called the X platform, we've got more than 500,000 followers. On-chain, on Ethereum though, we have less than 5,000 holders. I'm not sure how this adds up, but let's have a look at those 5,000 holders in more detail. What we've got over here is the number of retail investors versus whale investors over time. And the way we make this distinction is by minimum holding thresholds. So to be counted for the chart on the left, a wallet needs to have at least 3,000 Moca tokens. So at the current price, that's a bit under $1,000. For the chart in the middle, it's 30,000 tokens or a bit under $10,000. For the chart on the right, another 10x. So that's now almost $100,000 worth of the token. We can see the initial airdrop where especially small retail sold off subsequently. And since then, we don't really see long-term accumulation by the retail investor. A very similar trend for the wallets with $10,000 worth of the token. However, there was clearly less selling after the airdrop. Now on the right side, we see the least selling. This is now the whales. We rather see accumulation over time. Isn't that interesting? The smart money, the people that tend to move most funds, they bought over time. It's the people with the deepest pockets that make money with a rally like this. This is an effect that we see time and time again, right? It makes sense to follow the smart money. If retail is selling, that's fine, but at the same time the whales are buying. Now, there were two waves of attention for Moca. What we see over here is the number of buyers and sellers over time. And the left chart shows simply just the raw numbers of buyers and sellers. On the right side, we see this normalized to 100% per day. And so initially there was a lot of action with the token launch. And then the 16th of December had been incredibly active. That was over here, right? When the price more than 4x in a single day. But now we see a recovery again of the price. But we don't necessarily see how the numbers of buyers and sellers is going up to the same degree. What we rather see on-chain is how there's more and more sellers compared to buyers. So the ratio of sellers versus buyers tends to be increasing since that massive pump. What's going on? Let's dive into a bit more detail what actually happened in the last month. So where the price more than 4x'd. Here's again the number of holders over time with the same holding thresholds, but we're only looking at the last month now. So each data point now is 1 hour. It's not 1 day. We're just looking at the last 30 days. And clearly the pump on the 16th of December did generate a lot of attention. The number of retail investors went up by roughly 30 to 40%. The number of whale investors increased even a bit more, relatively speaking. Medium-sized retail almost doubled. But have a look at what's happening recently, right? Pretty much nothing is happening and retail is taking advantage of the rally. So we're seeing this recovery in the price, but we're seeing retail selling. In other words, what caused the first pump here is something very different to what's causing the second pump. Those two rallies are not created equal. Have a look at the number of new wallets versus returning wallets over time. Again, the 16th of December made the token wake up. This is when a lot of new wallets entered. This is now different. We don't necessarily see that many new wallets entering again. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart. So it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor protocol went bust. This is when UST depegged. The market as a whole shrunk, money was flowing out of crypto, and this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again, and that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto, and that of course means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual Protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by Crypto Gains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They're over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstrade.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. So what is causing the recent Moca rally now? If it's not a lot of new investors that buy in, if it's not a lot of retail investors that buy in, I believe what's currently happening is potential manipulation by the market makers and by the very heavyweights. Because what we have looked at with all those statistics is the on-chain metrics, right? We have looked at the buyers and sellers on the Ethereum chain, but we can't really see what happens off-chain. We can't really see what happens on the centralized exchanges. And I believe it's the centralized exchanges that push up the price now. Have a look at the trading volume in the last 24 hours. Most trading happened on Bybit, on Gate.io, on HTX, on BitGet and on KuCoin. Only after those 5 centralized exchanges do we have 2.6% of trading volume happening on-chain, on Uniswap. On top of that, we've also got perpetual futures. So those are levered bets on the price. So imagine a centralized exchange owns a lot of the supply of a token for market making. They can pretty much move the price in any direction, and at the same time they also offer the bets on the price. They can then at their will liquidate their customers. That's, I believe, what's going on here. There's simply a lot of levered trading happening. The second rally that we're seeing in the last few days is not organic. That's, I believe, what's going on here. The second rally that we see here is not organic. And so I don't bet on Moca. Yes, manipulation can continue for a while, but it's very hard to anticipate what those heavyweights will be doing. I personally prefer to bet on assets where I see either smart money currently buying in or where we see organic growth over the long term. And then we can simply just bet on that organic growth, a lot of new investors buying in. This is not what we currently see with the Moca network. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.